Hi, and welcome to Market Conversations. Just want to do a quick video on PayPal, but before I get started, I just want to let you know that I am not a financial advisor. This is just for entertainment purposes. So PayPal is currently trading at $62. They had earnings last week and it plummeted after earnings. We can see a huge red candle on May 9th, followed by another huge red candle on May 10th. Tried to recover a little bit on May 11th. You can see a median red candle on May 12th, and today it was only up 0.91%. Take a look. This is a 3-year chart. This stock was once trading above $300. Of course, this was during the pandemic when everyone was staying at home and buying stuff online. Now that everything is opened up, you can see that PayPal has slowly declined, hitting a low of 61.31. Their 7-year low. It's incredible that people who bought in the last 7 years have not made any money if they did not sell. So take a look at the news here. So on May 12th, the stock was downgraded from outperform to neutral. From outperform, and the price target is $58. Yikes. And we can take a look at here, May 12th, why PayPal stock dropped 14.4%. PayPal saying following the release of Q1 earnings results on Monday, but at first glance, it's not clear why. The payment company had a solid quarter, beating earnings estimates and boosting profit projections for the full fiscal year. Total payment volume grew 10% year over year to $354 billion, while net revenue was up 9% to $7 billion. Operating income rose 41% year over year to $1 billion, while earnings jumped 61% to 70 cents per share. In addition, PayPal raised its guidance for Q2 fiscal year 2023 based on first quarter momentum and the success of its cost-cutting initiatives. Revenue is expected to increase 6.5% to 7% in the second quarter, while EPS is forecast to come in at $3.42 at the end of its fiscal 2023, up from EPS of $2.09 in 2022. However, several analysts lower their price targets for PayPal, primarily due to projections of lower operating margin expansion than previously anticipated. On GAAP, operating margin is anticipated to increase 100 basis points this year as opposed to the previous expectation of 125 basis points. The company said the reduced guidance reflects its unbranded processing volume contributing more to growth. The unbranded processing business is its merchant processing arm, which operates through platforms like PayPal Braintree and PayPal Complete Payments. While growing, it is a lower margin segment than its payment business. The fact that Braintree is doing better than we expected, I see that's weighing on people's thoughts right now. But I much prefer Braintree to be doing well than not be doing well, given all the strategic reasons for that and the fact that we expect we'll add incremental margins on it. So yes, unbranded growth is higher than we thought, and that's putting some pressures on margin, but that over time is a benefit to us. Overall, PayPal plans to reduce the margin drag by expanding unbranded products and cross-selling services. There are half the people saying that PayPal is a value trap and that it will continue to go lower. The other half are saying that it is a bargain, it's a good deal. Only time will tell. We don't know what the future holds, and right now it is quite scary. No one wants to buy PayPal. As you can see, by the last few days, it's just been selling off. Today it's green, but we don't know what tomorrow is going to be like, especially if NASDAQ sells off. So NASDAQ has been green in the last week. So of course, if NASDAQ sells off, a lot of tech and PayPal will sell off. So that is very dangerous. And I hear people saying that Apple Pay is also taking PayPal's market share. Let me know your thoughts on that. I currently lost quite a bit of money because I bought calls, short-term calls, hoping that this stock would rebound after earnings. But as you can see, it has dropped tremendously. It was close at $65 on May 9th, and it just slowly sold off. And the premiums are pretty low right now, and I bought them when they were high. So I lost money on that, over $10,000. It's crazy how fast money goes. So just be very cautious. If you're buying calls, I would highly suggest buying shares. At least the shares, they don't expire. But if you're buying shares, I would also try to hedge it just in case PayPal does continue to sell off, because we don't know. There is really no support right now. There's no support. You have to go all the way back. I think around $40-$50, that's when the next support is. So it's pretty scary. You can see that premiums right now are very low on the put side and the call side. So 28,000 volume traded for the 63 strike. So people are hoping that the stock is going to at least 63 or higher by the end of the week. That's pretty scary, because if we take a look at this option actually went to, this was when it first opened, it went to 0.84, and since then it's been slowly going down. There's no premium, so when you buy calls, they're just going to lose value. You can see it was up 0.91%, but the premiums went down. So if you're planning to buy calls, I would highly suggest giving yourself plenty of time for the stock to go up, because I sure didn't. I thought there would be a rebound. I lost quite a bit of money, so be careful. So July, you can see people are still buying calls. I mean, they are a little better, and at least they give you plenty of time. That's what you can afford to lose. And just because a stock is low, 61.31, the lowest that it hit, doesn't mean that it can't go lower, because it definitely can. There's still a lot of room to the downside and, of course, to the upside. But right now, people don't want to hold PayPal. Let me know your thoughts, and thanks for watching.